With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB this Wednesday afternoon. I'm Juliette Sarli. Another record hit in the early session, particularly in terms of an intraday record. We are still looking like we will close at a fresh record high as well, up from yesterday's gain, which saw us have our highest session since Valentine's Day. The ASX 200 up by about 0.1% going into the close, 8,597. So it looks like not quite at that 8,600 point level, but it still will be a fresh high. And at one point, holding around 8,639, I believe. I don't want to speak out of school, but certainly a fresh intraday high at one point. And of course, we're starting to see a little bit of a wobble coming through in US equities, still waiting, US futures, I should say, still waiting to see what is happening in London with 2 days of talks between US and Chinese officials, and shares in mainland China certainly standing out today, up by almost 1%. The regional benchmark index, the MSCI Asia Pacific, up by about 1/3 of 1%. All right, so let's get into the themes of the day. And of course, we are trying to reset records. There's also been a lot of takeover talks. We had yesterday, of course, South Korea's Hanwha making that play for Ostal and Cepheus, the, of course, US regulator saying that if it wanted to, it could get 100% of the shipbuilder. Today as well, we had Johns Lyng announcing that, or confirming rather, an AFR report that had been received a takeover from the firm Pacific Equity Partners. So it's skyrocketed something like 19% on that confirmation. And of course, inflation anticipation as we wait the US CPI data coming through tonight. Let's have a quick look at how the sectors moved today, kicking it off with the miners all firmly in the black. Fortescue there up by 3.5%. You've got US iron ore futures in US dollars around $95.50 a tonne. A lot of expectations of growing supply, but also some resilient demand here from China and these hopes of easing Sino-US trade tensions. Having a look at the REITs as well, they had a solid session. Goodman Group there up by around 0.9%. Stockland up almost 3%. And then let's have a quick look at the tech space. There was a little bit of a wobble coming through from Xero and Tech One. NextDC though, we touched on that on the call. That was up 0.5%. WiseTech Global up 0.2%. Having a look at some of the corporate news, Qantas to close its intra-Asia airline Jetstar, saying the move will allow it to recycle around $500 million in capital to support its fleet renewal program. Now, do remember that Qantas has been on a bit of a tear of late, so that drop in its share price more probably a reflection on that. We also had PLS flagging a 23% increase in lithium reserves, shares up almost 7%. Heading the other way, Perseus Mining detailing a 5-year gold production outlook for some of its African mines. I mentioned Johns Lyng there soaring on a buyout offer from Pacific Equity Partners, and Fletcher Buildings also having a good session, up by about 11%, confirming its strategic review, buying potential bidders out of the woodwork. And I should mention that we also were looking at Zip when we had that tech sector board up there before, because of course it announced a profit upgrade, and that was the stock of the day. We'll get to that a little bit later, but let's welcome to the COB Mark Gardner from MPC Markets.
Good afternoon.
Good afternoon. So a little bit of a wobble coming through in the afternoon trade, but looks like another record.
Yeah, and led by the forgotten sector, the materials sector, for a change. We I think this is the first time in 6 months I haven't done media and been asked about CBAs, the first question. So, Fortescue and BHP doing a little bit of the heavy lifting. Those commodity prices realistically, particularly for BHP, it's involved in uranium, it's involved in copper, and those prices are 10 to 15% higher overall in the first half of this year. And they're trading at pretty cheap valuations, and we're sitting at record highs, and I guess maybe the fund managers have actually looked away from the financial sector for a change and had a look at the very cheap, other parts of the market. So Same as what the private equity guys are doing with the likes of Fletcher Building and Johns Lyng as well. If those guys are sniffing around, they're starting to see some pretty significant value. So I think that if you widen out the Fletcher Building and the Johns Lyng Group charts to more than a day, they're still very cheap. And to be honest with you, they've had EQL, which is a big private equity firm out of Sweden, and KKR, which is the biggest private equity firm in the world out of the US. Both been sniffing around there, so I would expect. They've got an exclusive bid, non-binding, until the 27th of June, and then other bids can come in. So I would probably expect another bid, and it's very opportunistic for Johns Lyng, particularly because they're not allowed to comment on the catastrophe business, and basically the cyclones, tornadoes, and flooding in eastern seaboard of Australia, and then in cyclones and tornadoes in the US and the LA fires, all that insurance assessment work's coming through, so they do need to kind of rush their bids through, because I would say that Johns Lyng's next earnings, when they can comment on the catastrophe work, will be significantly higher, because there's about $150 billion worth of work.
Yeah. Is there going to be any Australian companies left? I just talked about the fact that Hanwha might take over Ostello in full too.
I don't see that going through, just from a national interest point of view. I think it is, we do need to have some defence contractors here that aren't just technology based.
Yeah.
But, and obviously shipbuilding particularly, given our pretty vast coastline. But yeah, I look, the ASX has done a pretty poor job for a very long period of time. And even our best tech companies are just skipping the local market and going overseas. So I think until that really turns around, you get access to more capital. I mean, we're increasingly seeing our clients are gravitating towards US stocks. We'd be doing far more US and global stocks now than we would ASX. But which is a real shame, because there's some great Australian companies out there that are sitting at really, really cheap valuations, because the money's going elsewhere, where you can sort of see more inherently bullish markets overall.
Yeah.
So.
All right, speaking of tech, Zip, I think it was up something like 14%, so upgrading its earnings, looking like a good player still?
Yeah, I mean, we're not in Zip. I'm not a big fan. If I was going to go down the credit scale, I think Judo is lagging. Not the same space, but a similar space in terms of being financials and lending. But fantastic result from the company, and credit to management for turning that around, because 2 years ago that looked very, very ugly, and people were calling the end of buy now, pay later. So yeah, big credit to management for turning that around. I mean, there's some naysayers saying that credit card defaults are through the roof in the US, and people are turning to buy now, pay later to fill that gap, because they can't meet their needs on their credit cards. But look, it's fairly that's fairly speculative. I'm not entirely sure whether that correlation is 100% true. So I think they've just done a great job in getting their product out there and making it easy to use.
Let's talk about Qantas. I mean, as everybody knows, because I bang on about it all the time, I lived in Singapore for a long time. I don't remember anyone using Jetstar Asia. There's so many other cheaper alternatives. Is it a surprise they've decided to close it down?
No, I wouldn't have thought so. My wife recently went to Tokyo and flew there Qantas and back via Jetstar.
Right.
Said it was a vastly
different service.
Different service, particularly of a flight of that that long haul nature. Probably people going to Bali might be a bit annoyed, because I think that was probably one of their major.
But there's so many other routes, so many other airlines.
Yeah, exactly. So I agree with what management's done there in terms of consolidating the business, because the airline business is hard enough as it is, and I don't think you need to be stretching yourself thin, because there's a lot more maintenance, you need more staff, etc. Whereas most businesses will concentrate on what they do well, and I think Sydney, Melbourne, is one of the most travelled routes in the world. So stick to what you're good at, basically, and because there's plenty of money for up and down that east coast of Australia.
What about Qantas, though, in general, how it's looking? I mean, getting towards $11, and then Virgin maybe making a comeback.
Yeah, we haven't been in Qantas the whole way.
Okay.
Been happy spectators. It's just such a tough business, and we didn't really like and then on top of that, new management, etc. So, yeah, but not to say that we didn't necessarily like the company. We just thought there were better opportunities elsewhere. So it does look expensive here, and I think with a new player in the market, it might suck a little bit of capital away from Qantas because it's really you're owning pure play. But yeah, I'm not something that I tend to, that we're really focused on, to be honest.
Yeah.
And then we've been in corporate travel, but we exited that. I think a few months ago, really, but because we're just a little bit wary of it being the travel sector being a real target for AI. There's a lot of competition, and I think that's going to put a lot of price and margin pressure back on the airlines, the hotels, the rental car, and the travel agents themselves. So I think that margin expansion they got coming out of COVID with the revenge travel is probably going to dissipate over the coming couple of years.
Yeah, fair point. Okay, quickly, we've got CPI tonight. Where do you expect the direction given we've got US-China trade talks too?
Well, US-China trade talks, I mean, this is day 3 of a one-day meeting. They've agreed to a framework of the same consensus. I mean, there's really no details. The market's being a little bit too optimistic about what's going on. The fact that it's dragging on, I don't think is necessarily a good thing. But CPI tonight might be a bit wild because with all the DOGE job cuts, they've had to remove a few major cities out of the data, and a lot of the data moving forward now will be on a lesser sample size. So this happened in Australia. I'm showing my age here. When Howard was in power, they cut the ABS budget by about, a third or a half. And figures did get a little bit wild after that until the economists got used to them normalising. So look, I'm not brave enough to call. There'll be a little bit of the tariff effect in there, but I don't think as much as people think. I think there'll be a little bit of inventory. I think retailers would have used up some of their inventory and tried to keep their prices low just to clear the decks. Because the worst thing you can possibly do as a retailer is get stuck with inventory. Yeah. And who knows? Because I think it's a pretty significant thing to have 3 major cities removed from your sample size in the world of statistics. And they say that it shouldn't materially affect the numbers, but we can be 0.1 or thereabouts the market can be quite sensitive about, particularly with CPI. So be an interesting to see.
All right, watch this space. Thank you, Mark. As always, Mark Gardner from MPC Markets. We mentioned that the stock of the day was Zip. Our experts Andrew Weilant from DP Wealth Advisory and Henry Jennings from Marcus Today joined me on the call.
This was my pick for 2024 at 40 cents and has done very well, and it's continuing to do very well. There was a brief window of opportunity. There was a brief window of opportunity for lots of things after Liberation Day, and Zip actually, I think it got down to about $1.10, $1.15, and we bought it at $1.63 for the small cap portfolio yet again, so that was good, and it has done us proud. I have to say that this is the second upgrade for Zip since the results, so that is not a bad effort, I have to say, and it is still pretty cheap.
Zip was doing it well before they were mandated to do so that's from a confidence point of view. But the other thing is some of the other players who may not have as high level of compliance or due diligence, it will make it harder on them either trying to play catch up, or they might just say this is all too hard. So for that reason, I think it's also a buy, and $3 is probably the target price in the short term.
All right. All right, a double buy there for Zip. I think it took us till about stock 8 to get another double buy from those guys. You can watch the call on ausbiz.com.au. Let's have a look at the market leaders today. Zip, of course, they're up 15%. Fletcher Building as well. We touched on that with Mark, up by around 11%, and the lithium players getting some love as well. To the downside today, Lynas, of course, we're still watching this reaction of the impact to rare earths stocks, particularly as we are seeing the US-China talks signal some of the concerns over the rare earths export curbs. Beach Energy there, Clarity Pharmaceuticals coming off some recent moves as well, down by about 6%. In the small end of town, you've got Metal Powderworks up by almost 20%. Now Monash RVF, this is interesting because of course yesterday it fell something like 30% when it revealed yet another embryo mix-up at its Melbourne laboratory. So today there were some buyers, sending the shares up by 9%. And the Star, we had that on the call. Both my guests would avoid it, but today some buyers up 8%. Let's have a look at the small end of town laggards. Dateline Resources down around 23%. Recce Pharmaceutical, I can never really say that one very well, with apologies to everybody who works there. All right, tonight, trade talks in London continue as well. I think they got some KFC and some McDonald's, some great American food delivered yesterday. Tonight, CPI US could lift by about 1/3%. Also, the US federal budget balance for May. High import duty collections could boost a surplus. Tomorrow, we've got CBA household spending insights, and we'll be talking to the chief CBA economist, Luke Yeaman, on Friday here on AusBiz. We've also got the ASX holding an investor briefing. Let's have a final check of where the market is. Now, you can see those very strong intraday records reached early on in the session due to the uncertainty of what's going to happen. Amidst the talks in London, you have seen a bit of a wobble in US equity futures. However, we still have closed at another record high. We're up 0.2% there on the CBO 200. And I'll just get a refresh on my screen as to where the ASX 200 has finished. Look, I mean, only marginally, but it's still higher than where we closed yesterday. So up 5 points, 8,592 points. We will be back from tomorrow to recap the CPI print in the US and, of course, what happens between the leaders in London from China and the US. We'll bring it all to you from 9:45 a.m. Eastern.